especially if it's not a follow-through day. If you've had a low and then you're going to float higher for 2-3 sessions and then get a follow-through day, and then you buy it even though you're still below the 50, okay, fine. A follow-through day is its own separate guideline for getting you engaged in the market. But in most instances, when you're below the 50, you're below the declining 10 and the 20, that should be a very simple market filter for a new trader. Just don't be a buyer of stocks. Don't buy stocks that are extended. So either above their flat pivot. For me, I also would say don't buy stocks that are more than 4 times their average true range from the 50. A very simple example is if a stock moves 4% per day, don't buy greater than 16% above the 50 simple moving average. You're already starting to get into, once you're at 6 times, 7 times, and people are like, wow, this looks so amazing, you're buying extended. The only nuance there is if it's an earnings gap up, that becomes the only reason that you can buy anything that's extended because it's on a news catalyst. Extension from the 50 is actually what you want to see. So a little counterintuitive, but again, something that I think, traders definitely pick up on and they have to learn. Also be a little bit more careful with late stage bases, names that are a little loose around pivots, names that look like they've built a clean pivot, but then fail once, fail twice, fail 3 times. You got to be a little bit more careful. Look at where the stock has come from. That's not to say that names can't go higher, but when you do get to late stage bases, they tend to be a little bit choppier. They tend to need at least a correction before they can come back to life. Wide and loose base, something of which you're seeing in the optics. Again, do I know that they're going to break down? No, but think about where a name like LITE has come from, and then say to yourself, does this base up here feel like a clean base? Maybe, but just not yet. And it's not that I don't think it's great, but it's, you have to take into context of where this thing has come from and in the time frame it has done it. It, just last April, so 16 months ago or 14 months ago, the stock was $45 and it effectively got to 1,000 plus. Is this enough consolidation here for you? Is this